right at this very moment, without most people knowing it. A silent technology is reshaping the rules of global power. This isn't a conspiracy or a passing fad. It's real, it's alive, and it's growing with every second that goes by. While you're watching this video, governments, banks, and multinational corporations are struggling to adapt to a system they can't control, a network that doesn't need permission or middlemen. It's called blockchain, but this goes way beyond Bitcoin or just a simple cryptocurrency. We're talking about a revolution in how truth is stored, value is transferred, identity is managed, and freedom is protected. And what's most unsettling is that those who understand how it works aren't just one step ahead, they're building the future. Today we're going to break down this technology with simple words and real-life examples, but we're also going to stare into the abyss of what's coming. Artificial intelligence, digital voting, immutable contracts, and even quantum threats. What exactly is blockchain? How does it work? And why is it considered the backbone of the new global economy? Take a deep breath. What you're about to discover could change the way you see the digital world forever. Join me on this fascinating journey through the heart of decentralization, the blockchain. What is it? How does it work? Why is it revolutionizing the world? Get ready to unveil the secrets behind this digital marvel, the enigma of blockchain, as we decode its mysteries. At the heart of this story lies blockchain, a decentralized network that challenges conventions. Imagine a digital ledger, but not one controlled by a central authority. No, this one is different. Every transaction is recorded in blocks linked by cryptography, forming an unbreakable chain. It's as if each block were a link in a digital suit of armor, protecting the integrity of the data. And what is it for? This is where the plot thickens. From cryptocurrencies like Bitcoin to smart contracts, blockchain is transforming the way we interact in the financial world. It's as if we've discovered an impenetrable digital safe. But that's not all. Supply chains, electronic voting, even ownership of digital assets. Everything is at stake. Can you imagine a future where trust doesn't depend on intermediaries, but on math and algorithms? But be careful, not everything is rosy on this journey. Scalability is like a butterfly in a digital storm. Blockchain networks struggle to process transactions across distributed nodes. Transaction fees can certainly go up, and processing speed can definitely go down. However, decentralization is its greatest strength. There's no single point of failure, and that's gold in a cyber-dangerous world. The future beyond the blocks. What does the future hold for us? Imagine a world where trust is automatic, where transparency is the norm. Blockchain is paving the way toward that digital utopia. But like in every great story, there are unexpected twists. Will it become the backbone of digital society, or will it face even more formidable challenges? So, dear viewers, get ready for a journey with no return. Blockchain is the key to a bold and unknown future. Are you ready to unlock its secrets? Subscribe, turn on the notification bell, and let's dive together into this digital labyrinth. Join me. Let's go in.
Okay, let's get started then. Blockchain technology is fundamental in the world of cryptocurrencies. It's a decentralized record-keeping system that secures and verifies transactions collectively on a distributed network. Born with Bitcoin in 2009, its purpose was to create a digital currency independent of central entities. Blockchain has stood out for its ability to guarantee the security, transparency, and immutability of data, qualities that have driven its adoption in various sectors beyond finance. The essence of blockchain lies in its structure, a chain of blocks containing information about transactions validated by consensus mechanisms such as proof of work or proof of stake, thus ensuring its integrity without the need for third-party oversight. In other words, it acts as a decentralized record-keeping system that promotes security, transparency, and immutability. Its origin with Bitcoin and how it has transcended the financial sector shows that it can be adopted in many industries. Thanks to its unique structure and consensus mechanisms like proof of work and proof of stake, this summary lays the groundwork for a deeper exploration of blockchain technology in the following sections of our video. In the digital age, where information is power and security is essential, the emergence of revolutionary technologies is redefining blockchain data. This is a revolutionary innovation whose significance goes far beyond cryptocurrency. But let's demystify this complex technology and break it down into simple, easy-to-understand terms. What is blockchain in simple terms? Imagine you're playing the classic game of telephone. Do you know how it works? Simple. You whisper a message or rumor into a friend's ear, and then it keeps getting passed from one person to the next. But by the end, the original message often ends up getting distorted. Isn't that right? By the time the information reaches the last person, it's completely different from the original. Well, now imagine if there were a way to provide a method where, no matter how many people the message is passed to, or even if it's given to a lot of people, it always stays exactly the same. Well, that would be awesome. That's the whole point of blockchain. In its simplest terms, blockchain is like a digital diary that's shared among different people or a group of people. It's important information that's sent, but it's not secret. In other words, any member of the group can make an entry in that diary and review it. But here's the thing, once the entry is complete or once the full message has been sent, it can't be changed or deleted. It's always there for anyone to see. The record isn't stored in just one place, like a library or a single computer. Instead, it's distributed across many computers, which spreads it throughout the entire blockchain system or even the whole world, making it decentralized and unchangeable. If someone tries to alter it, it would be impossible and obvious, because only their record would have different data. Everyone else would be verifying the original. Let's look at another example. Let's say you and a friend decide to start a collectible card club and you create a shared ledger to keep track of who owns which card. Every time a card changes hands, whether it's given or received, both of you write down a record. This way, all the club members can see who owns each card at any given time. If someone tries to claim they've returned or traded a card but they haven't, everyone else can check to see if it was actually returned. They just go in and verify the information themselves. This is a basic example of how blockchain works. Well, in the tech world, this collectible card club could be a group of people involved in financial transactions, like Bitcoin, a network of computers sharing data. So, let's imagine these cards have any kind of value. For example, money, property, contracts, or even information about votes in an election. Well, if we take the previous explanation and there's a decentralized and distributed system where everyone can go in and verify who can alter or erase this outcome. That's basically how blockchain works. It's a transparent, immutable, and decentralized digital ledger that records transactions across many computers, thus providing a way to guarantee trust, accountability, and security. That's why, in today's world, these qualities are more important than ever. So, what's the main purpose of blockchain, then? The main goal of blockchain is to achieve secure, transparent, and tamper-proof transactions in a decentralized way. It's about building trust in an environment defined by distrust. But let's break it down a bit more. Let's talk about security in the blockchain. Now, we're getting a bit more technical here, but I'll try to keep the explanation very simple. Each transaction is encrypted and linked to a previous transaction, hence the name blockchain. This chain of transactions is visible to all users on the network, but making changes to any transaction would require altering many others, which is computationally unfeasible for all subsequent transactions. That's how blockchain can truly prevent fraud and manipulation. Transparency for the transaction. The contents of the blockchain are visible to all members of the network. Technically, blockchain works through a network of computers or nodes, which each keep a copy of all transactions. Each transaction is verified by these nodes through a consensus process, such as proof of work or proof of stake. Once the transaction is verified, it is grouped into a block along with other transactions. This block is encrypted and added to the existing chain of blocks, updating the blockchain on all nodes. Encryption ensures that the information is unalterable and secure. This transparency guarantees accountability and makes it nearly impossible for any participant to cheat the system. Decentralization, unlike traditional databases which are controlled by a single entity, for example, a bank or a government, in a blockchain is distributed across multiple nodes or computers. It's completely different. This decentralization means that no single entity has total control over the chain, which makes it resistant to censorship and single points of failure, basically the main goal. Blockchain aims to provide a secure and transparent way for parties who cannot participate. Mutual trust is required to agree on the state of the deposit without the need for a trusted base or an intermediary to transfer cryptocurrency such as Bitcoin or Ethereum. Additionally, properties can be registered, smart contracts can be made in any field, bets can be placed, or even in the natural and normal world we live in. So, by writing or registering a product on a blockchain aims to achieve security. Transactions are transparent and efficient. And in this sense, what exactly can blockchain do? Blockchain technology, although often associated with cryptocurrencies, has a wide range of applications. These applications can benefit ordinary people in many ways. This is what blockchain can really do. First, it can enable secure transactions. Blockchain can facilitate secure peer-to-peer transactions since intermediaries like banks are not required. This, first of all, can mean faster transactions and lower fees. It enables transparency of money or remittances in the case of international transfers and transparency in the supply chain. Blockchain can provide supply chain transparency for consumers. This means you can verify the authenticity of a product and track its journey from origin to store, allowing you to make ethical purchasing decisions. It gives you a digital identity. It can provide a secure way to manage identities. Additionally, the process of online identity verification can be simplified, making it easier and safer to access the following services: online banking, e-commerce, and even government services. It can be used for governance or for voting, for example. Blockchain can be used, and this creates a secure and transparent voting system that reduces the risk of fraud and makes the process easier. People can vote remotely, which can increase voter turnout. Health cards. Blockchain can be used to create secure and interoperable medical records. This will give individuals more control over their health data and improve quality. It can be used for asset protection, for example, protecting copyright for artists and creators. Blockchain can be the way to register and protect intellectual property rights and ensure that creators receive fair compensation for their work. You can have a decentralized economy. Blockchain is the backbone of DeFi, and its goal can be to reinvent traditional financial systems like lending or insurance in a decentralized and highly transparent way. It could provide financial services to people who currently don't have bank accounts or have never made a bank deposit. As you can see, the possibilities of blockchain are endless. With the range of blockchain developments, the application of this amazing technology can become more and more diverse and powerful. This is how the blockchain works, step by step. Understanding how it works can be tricky, right? But let's break it down in simple terms. Step 1. A transaction begins. The user initiates the transaction. It could be anything from sending cryptocurrency, gifting Bitcoin to another user, registering a contract, or even voting in an election. Step 2. Transaction confirmation. Once a transaction is started, it needs to be verified on the blockchain. This is approved and carried out using a network of computers, also known as nodes. These records verify the transaction information, including the validity of the operation's details and the user's status. Step 3. The transaction is added to the block. After the deal is confirmed, it is grouped together with other verified transactions in a block. Each block has a certain capacity. When this capacity is reached, a new block is created. Step 4. The block is connected to the circuit, which ultimately forms a chain, and before adding a block to the chain, it must have a unique identifier. This identifier in computing is called a cryptographic hash. This hash is created from the transaction data in the block and is unique to that block. The block also contains a hash of the previous block in the chain. This is how links are created between blocks, and this is where the concept of blockchain comes from. You can't insert a block in the middle since each one has a unique identifier. Step 5. Reaching consensus. Now the block is added to the chain, but before it is accepted by the nodes in the chain, for a block to be valid, the network must reach consensus. This is done through a process known as mining in some blockchains, like Bitcoin for example, where nodes solve a complex mathematical problem. This is usually called proof of work. Other blockchains use a consensus mechanism called proof of stake. Step 6. Confirmation. Once consensus is reached, the block is added to the chain and the transaction is fully completed. The blockchain is now updated and the new blocks are visible to all users on the network, along with the transactions contained within them. Can the blockchain be hacked? Blockchain technology has been developed to be secure and tamper-proof. It's true that it's not completely hacker-proof, but hacking a blockchain is extremely difficult and requires a lot of resources and a great deal of power. The blockchain is actually vulnerable to a 51% attack. This happens when a single entity gains control of more than half of the mining power on the network, allowing them to manipulate records and approve new blocks. They can double spend their coins and use the same digital currency or token multiple times, and prevent other miners from validating new transactions. But carrying out a 51% attack on a blockchain as large and well-established as Bitcoin requires a huge amount of computing power, so it's highly unlikely. Another potential vulnerability exists in smart contracts that run on some blockchains. If there is a bug in the smart contract code, hackers can exploit it. Such was the case with the infamous DAO hack Ethereum blockchain in 2016. It's important to note that while the blockchain itself may be secure, its applications and digital wallets that interact with the blockchain can be vulnerable to hacking. Many reported blockchain hacks are actually attacks on peripheral systems, not on the underlying blockchain itself. There are different types of blockchains. The technology has evolved in several different ways. If you want to learn more about this in depth, I'll leave a video up here or in the description preview. Each one has its own characteristics and applications. These are the 4 main types of blockchains. Public blockchains or public blockchain. These networks are open to anyone who wants to participate. They are decentralized and transparent. This means that anyone can join the network, confirm transactions, and create new blocks. Bitcoin and Ethereum are examples of public blockchains. In addition, you can download the applications and develop any kind of dApps or DeFi on them. The main advantages of public blockchains are their high level of security and transparency. However, they can be slower and require more computing power due to their consensus mechanism. We also have private blockchains. These are only available to specific network members or administrators. They are often used in companies and for internal purposes, which gives them more control over who can verify transactions and create new blocks. This control allows for faster transactions and less computational power, but at the cost of a certain degree of decentralization. An example of private blockchain platforms is Hyperledger Fabric, Yoast.io, R3 Corda, and so on. Consortium blockchains, or alliance blockchains, are also called federated blockchains and are controlled by a group of organizations, not just one. They strike a balance between the openness of public blockchains and the control of private blockchains. They are often used in the banking industry, where several banks may maintain a shared blockchain. And then there's the hybrid blockchain, which combines elements of both public and private blockchains, allowing you to control who can view and access information on the blockchain while still permitting verification from the decentralized web. An example of a hybrid blockchain is Dragon Chain. Different types of blockchains have their own advantages and disadvantages, and there are options among them. This depends on the specific needs and objectives of the user or the organization involved. What is the future of blockchain and its true potential? The future looks both promising and challenging. The potential of this technology could go far beyond its current scope and disrupt control by tech giants, where data protection is a given. It's not a luxury. Blockchain can lay the foundation for a decentralized network or Web 3.0, where users control their data and digital identity. This is fundamentally changing the balance of power in the digital world, but it also raises questions about how to truly manage and monitor a decentralized network. Token economy. As blockchain and cryptocurrencies continue to evolve, we can see this symbolizing the economy. In this economy, tokens are real-world assets like property, real estate, art, and can even be traded over time on the blockchain platform. They can democratize access, allow investment in opportunities, and help build a more inclusive global economy. However, they can also disrupt the traditional financial system and require new regulations. Artificial intelligence and blockchain. The fusion between artificial intelligence and blockchain can lead to greater transparency. An efficient artificial intelligence system alongside blockchain can provide a tamper-proof record of AI decisions. This could be very important in areas like autonomous driving or healthcare, but it also raises ethical questions about the control and use of artificial intelligence in a decentralized context. Basically, we're saying that blockchain would control the threat that artificial intelligence could pose. Quantum threat. Controversially, the arrival of quantum computers could threaten the blockchain. Quantum computers can break the encryption algorithms that protect blockchains, leading to a quantum apocalypse. However, this has also led to the development of quantum resistance. Blockchain and cryptography in general. The future of this network is an exciting journey into the unknown. It promises a more decentralized economy in a transparent and fair world. It also creates new challenges and contradictions as it explores this uncharted territory. Progress is being made in ethics and in the legal and social implications of this revolutionary technology. Governments are testing pilot projects related to identity, electricity storage and sharing, visas, and tourist tracking. Of course, cryptocurrencies, financial applications in stock markets, public transportation, insecurity, state lotteries, identity solutions for refugees, connecting public services, and transactions between banks. All of them with the goal of improving citizens' lives and public processes. Well, this is blockchain, an impressive, incredible, and downright powerful technology. We got to know the main blockchain networks where the most important public and business projects are being developed. This technology is revolutionizing the world as we know it more and more every day. And in the next video, we'll be talking about all its types and applications, the main cryptocurrencies that come from them, and the networks or projects where they operate with the highest market capitalization and the greatest technological and functional significance. I'll be waiting for you, but not before reminding you to subscribe to our channel, give us a like, comment whatever you want, and hit the bell so YouTube helps us bring you more content. Bye, thank you, see you soon, it's an honor.